Hi everyone, today we're going to talk about why retail traders lose out when they're trading in the stock market, right? So we're going to start off by looking at a stock, which is Google. So I feel that retail traders, unfortunately, are not able to identify key areas of supply and demand, and due to which, they get faked out or they start having FOMO and they start to lose out in their positions. For example, if we just look at Google here, there's clear areas of where there's supply and demand on the bigger time frame, and also retail traders want to make money every day. They want to wake up, trade in the market, make a couple hundred or a couple $1,000s, and that's what they think trading is. Trading is a lot more complicated than that. A lot of the times you have to be very patient. You have to understand that you may not be able to trade if your setup is not there. So they don't have a defined plan. For example, I'm going to look at Google here. Google had amazing earnings. So if you played in the money call options or if you just bought shares, you would have been good. Right now, Google is retesting its previous breakout and it could go for a gap fill here, right? So if it does go for a gap fill, it's not necessarily a bad idea to enter or play the gap strategy. That's fine as well. But the way I look at it, I like to define it. I like to simplify it. So right now, after earnings, what I want to see is I want to see momentum build up in Google. So if I look at the daily picture right here, I don't see any momentum, right? So I see Google just back in this range bound trading. If it is going to go higher, we're going to see a break of the 30-25 and it's going to push up higher from here due to some sort of news. If it is going to go lower, we'll see a break of 27.80 and it'll go to the gap fill at 27.50. So these are the levels to watch, and once that's filled, it can go back lower, right? So if we just analyze this chart on its own and we look at historically how Google has done, for example, this was the previous supply area. And as you guys can see, once it figured out that this is a good area to consolidate, then it had a nice break here. We had a really big move from this break all the way up until here. So this is like a 13% move in Google. So this is what you got to look for. You got to look for where supply and demand is. Once it gets into the supply zone, like this area, for example, when it got in here, this is a good consolidation. And then you want to see a follow through with a break of this. If there's no follow through, then the chances are this is a fake out. Right now, we have two tops here and this is the third top here. So this level is obviously very important here. And then we got a supply area of support right about here. So if you're trading Google intraday, these supply and demand zones do show up in the smaller time frames as well. So you just got to be very vigilant, right? So, and your target is got to be very small as well. So if we look at Google right here, same thing. This is the area of supply. It could fall down, and this is where my support right now is temporarily between the 27.80 and 27.90 level. And if it breaks this, when we say break, right, we want to see volume pick up on the downside and an aggressive sell. So these candlesticks will expand and volume will start to shoot up. Right now, that's not happening. There's no reason to think that Google will do that. So this will be a fake out move. So let's look at something that could possibly have given us a good day trade today. Boeing was one of those companies. Boeing right now, it's trading in a range. It was trading in this triangle, the symmetrical triangle here. It did break below this, and now it's trading in this particular range right about here. So Boeing overall, it's still intact in the uptrend. It just is stuck in a long-term consolidation zone. So if I go switch over to the hourly time frame, I did notice something here where Boeing itself was consolidating in this range right here, right? So if we look at the range, which is this range right here, so this was a previous level that Boeing needed to defeat. And as you can see, when it defeated this level, there was an uptick in volume. And then it does a retest of the same resistance zone. So this is critical. When it goes for the retest and we have a push up in volume and we have 3 consecutive buying candles. So this is where you want to take the trade, get in right about here, and watch it right up. Right, so my target for Boeing was 212. Now, why did I have 212 as my target? So I go to the 1 hour time frame. I look at the previous peaks that it has. It was a most recent peak close to where I'm trading. It is 212 right now, right? So above the 212 level, it's got about 218. and then above 218 it could go to either 221. So these are my zone levels that I'm going to watch when I'm day trading, right? So when I zoom out to the bigger picture, these levels look very condensed and very small, but when you're day trading, you're looking at a smaller time frame. However, on a bigger time frame, the key levels are 229, 233, then you can go to 241, right? So there is going to be a time when Boeing does break this, but it's time to be patient, right? So this is about 4 or 5 days of consolidation before Boeing actually decides to make a move. If in these areas you are always trying to trade as a retail trader, whether you're trading options or you're trading shares, you're going to be bleeding money. Your sense of profit, it's not going to be there. There's going to be so many fake outs. It's going to be very choppy. It's going to be very hard for you to trade, right? So you always want to simplify it. Simplify your strategy, set for support and demand zones, and trade accordingly, right? So for example, last one I want to talk about today is Tesla, right? If we look at the 1 hour time frame on Tesla, good consolidation right about here, right? This is a big zone. It's been testing this level here multiple times, unable to go through it. So if we go into the 5-minute time frame, if you're day trading, right, you see multiple tests here. If you want to see a follow through just like Boeing had, we have top wicks here. So we have a lot of selling pressure still holding this zone and unable to get above it, right? So if you got in here thinking that, oh no, Tesla actually is going to go up higher, and if you look at the bigger time frame, yeah, if you zoom out, you can say, yeah, it's going to go to 984. Sure, it can, but does the price follow through? No. So this is a weak trade. So this is a trade where it's most likely going to fail, right? Because the resistance is still intact, the supply zone is still holding, the chances of failure are pretty high right now. So if you're going to trade the downside, for a downside, I'm watching the break of 878 and 875. Once this breaks, possible move to the lower zone of 830, right? So you've got to have these ideas in mind of supply and demand. If you guys like what I do and what I post, like and comment below.